read on the news today? Is it all right, time to look forward?
Well, firstly, thank you all for having me. This is really, really good. So at Citi Wealth, under Kate Moore as our CIO, we have had, it's 4 months in, it's almost felt like a year, really.
Yeah.
Like we've absorbed multiple shocks just in the last few months. Now, on a week-over-week basis, we've seen conflict in the Middle East. Is there a ceasefire? Is there not a ceasefire? Markets are up, markets are down, right? So you have a real risk of being whipsawed. And that's frankly what we've experienced just already. Part of what we do, and a big part of what we have to really be focused on, is looking through the noise, because it's been changing so much. So overall, we've been looking at fundamentals. We've been looking at a lot of the macroeconomic data as has been coming out. We've been looking at earnings
Throughout the
revisions.
war, you've been looking through the noise?
From the beginning. We entered the year constructive. So we entered the year constructive in global growth. We entered the year pro-risk. We have made adjustments since the war, actually. More focused on resilience, more focused on quality, more focused a little bit on defensiveness, but then also really looking for opportunities.
Do those changes that you made during the war, do you go back to what you had before the war, if this is indeed the end?
So one of the changes that we made was our regional equity exposure. We trimmed a little bit in Europe, and we added to the U.S. Now, even if...
Because the concerns over energy, and Europe is much more reliant on that part of the world.
Much more reliant on that.
So that's why you made the switch.
We made the switch. It showed the exposure. But even if the war was to end tomorrow, officially, we're still looking at the read-through on the companies and the earnings revisions and where that growth is coming from. And the U.S. is still delivering resilient earnings and more consistent earnings. And revisions and earnings revisions are coming through more strongly in the U.S. and the fundamental and macro backdrop in the U.S. is much stronger, much more insulated from a lot more of the macroeconomic environment and the shocks. And Europe is a bit more of a challenging period.
So U.S. exceptionalism is back? Or did it ever go away, really?
There's a bifurcation on that when you look at the asset classes. So from an equity standpoint, yes. From a fixed income standpoint, it's a little bit more nuanced. There, I will say.
Good point.
So the credit picture, we've trimmed in credit. We actually moved to a little bit more shorter duration
For the U.S.
For a fixed income standpoint.
Yeah.
And this is beyond the war. Spreads are at historic tights. That's the way it was. Even when we saw the shock, you didn't necessarily see that same pickup in yield to be able to compensate for that.
You said you moved away from Europe a little bit to exposure to equities here in the U.S., partly over what you think will happen as a result of a hit to earnings. Do you think the U.S. companies see a hit to earnings as a result of higher energy prices?
There's some. As you start looking at raw materials and fundamentals, so input costs, how much could U.S. companies pass through? Just today, of course, it looks like we're at a little bit of a ceasefire. The Strait is opening. Airline stocks are surging.
I know.
But
cruise lines too,
And cruise lines as well. But if it was persistent for longer, you'd see some areas that could be more affected. So there'll be sectoral type of dispersions as a result of this, some winners, some losers, but then also opportunities.
One thing I want to ask you, things like energy, which we've seen just on a tear, is that a longer term theme for you guys? Defense stocks, we're going to talk later on our broadcast about the president's budget and how much looking for defense spending in the United States. We're talking about $1.5 trillion that they're asking for. And we know defense around the world seems to be a sector, or countries are all beefing up their presence. And just raw materials, commodities as a whole. Yeah. Like all of a sudden we're talking about it a lot because everybody wants to make sure they have a healthy supply chain to it. And I wonder what the costs are or the investment play off of that. So all of that. Go ahead.
So in what you said, the critical thing that we see persisting, regardless if, again, conflict ends tomorrow, is supply chain. So the supply chain with regards to energy, supply chain for raw materials, supply chain for infrastructure, and the need for that, and fortifying that, the conflict in the Middle East really just highlighted and exposed what should have been in play when we were going through the pandemic. And that we needed to be able to fortify that. Now it's brought it to the forefront. We really need to focus on that, and we think that theme will be consistent regardless. We need to be able to fortify those supply chains. Now, the supply chains for commodities, for raw materials, for energy, but then also Another thing that I know we're not necessarily talking about today because the conflict in the Middle East is top of mind, AI and the supply chains around that, we don't see that as reversing. So as we're looking at opportunities, and there's a lot, as you said, of noise back and forth, which could cause some short-term disruptions, we're focused on what could persist and what would play out for the more medium and longer term.
What would that be? 30 seconds.
AI.
But I mean, like data centers, and like, what's the play?
Everything associated with the critical needs of AI, robotics, supply chains, energy, infrastructure. So we're doing a lot of work around that thematically, and we're talking to our clients and advising them, and that's where we see opportunities going forward.